Yeah, it was good. We'll just focus on key levels and how you take entries with these key levels. So now, mind you see, key level, no be a fixed price or a fixed zone. You understand? A key level is an area, a zone. Why they call them key zones, key level. We say you expect something to happen there. You understand? Yeah, you don't want to buy or you don't want to sell at a key level. You want to read price action at a key level and trade in the direction of that price action. So looking at this chart right now, so how do we identify key levels? You identify key levels by using the bodies of the candles, not the high of the week or the low of the week, but the body of the candles. So when you want to look at the left side of the chart to identify your key levels, or you want to use the most current um, key level. You want to use the most current key level. So looking at this chart here right now, you can see a key level from this zone, considering the market is bullish and has been bullish for a while. So this is a key level here. So prior to this market, or prior to this price action, this key level was already identified and we took some long position from this price here. So now let's break it down and go to the lower time frame and explain how you take positions using these key levels. So before we could identify this as a key level, we can clearly see price from the previous week was actively bullish and it rallied all the way up. So we want to trade in that direction. You can see clearly here, price moved up, creating intermediate higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we want to see the price creating higher highs here. Now, when so looking at this price action, you can see this level here. This level here happened at the start of New York. Um, this level here happened early London session. So just like I said, key levels are zones in the market we expect price to react to. We are not really bothered if we take a buy position or a sell position, but we just want to see what the price will do when it gets to that level, and we'll trade the recurrent price action. So looking at this chart here from this price action, let's say before this zone was formed, there was nothing here. How do we take advantage of this bullish move? You see, you want to align your setup unless you are swing trading. If you want to day trade, you want to, let's say, align your setup, or you want to take setup that forms during sessions, active sessions, say London sessions, New York sessions. So now, looking at this price action, you will see that after price rallied up, creating intermediate higher highs, higher lows, higher highs, higher lows, as mentioned before, price retraced, and you could see this retracement here is a corrective retracement. It's not an aggressive retracement. So that's how you know price we want to continue in its original direction, which is bullish. So now, after price came down, retraced, we could say it tapped on this level. This is an intermediate level, a lower time frame key level. You see, and after price tapped on this level, you see it failed to close below. So this level is basically what you can consider it as a resistant tone support, and would have just took a position here. So took a buy position here with your stop just below, and to target this high here. But that was not how I took the position. Let me show you how I took the position. This I didn't even consider this resistant on support. I still went down to the lower time frame, the 1 minute, but I'm not going to go lower. But we are going to focus on price action here, and we can clearly see after we retraced from this bullish move, originally price was supposed to maybe either come back to this area and continue higher, but you can see this is early Asian session, so we did retrace correctively. This is what I would like to consider as a corrective retracement, correctively. And you can see early New York, early London session, we had this bullish engulfing, the first indication that buyers were already coming into the market. And after this bullish engulfing, we saw another retracement that came to test the low from where the buyers stepped into the market. When you pay attention, you notice that the intermediate price action has also changed its course from bearish to now bullish from this, from the break of this level. You see, from the break of this level here. So so as price was correcting, we could see how it changed structure here. We could see how price changed from its, since we know the overall movement or the overall trend is bullish, we could consider this as a retracement. And after this bullish engulfing at early hours of London session, it has given us the indication that price wants to continue higher. So this was how I took the position. Price broke above this place, this key level. If I wanted to get in early, this is how I would have bought immediately at the break of this level, and I have my stops just below this level, still targeting a clean 1 to 2 RR at this at the highest here. But still, that was not what I did. I waited for price to retrace back to this level because the market moves in zones. Let's just consider it like that. The market likes moving in zones. So you try as much as possible to get in at the zone, not when the market has already moved. So when price came back and tapped into this level, when price came back and tapped into this level, it failed to close below, giving us the indication it wants to continue higher. So that was when I took a position at this place using the low of that candle for my stop, and I was able to get more than 1 to 2 RR. So my setup was just like this, and my take profit was here. You see, so that's how you get, or that's how you take a position using price action and key levels. So this was just one setup. Just like I said earlier, price moves in zones, and you like to, or you want to take entries at this zone. So the here also is another zone using the body, and we can clearly see when price, after taking the highs, came back to retest this zone. This is a lower time frame key level, and as such it should be treated as one. Another position here with your stop just below here, and still targeting the clean 1 to 2 RR. Although I did not take this position, but if I had done so, this is what I would be targeting, 1 to 2 RR. So now let's go back to the larger time frame, or time frame higher than this one, which is the 15-minute time frame, and identify, just like we said earlier, key levels. Use the body of the candlestick, not the highs or the lows of the week, but the body. Now here in London, here in New York session, we also go back. So after everything that happened in London, price came back to tap this key level, and we failed to close below. This was New York, and upon reaching this level and failing to close below it, this is how I took a position from this level. After price came lower, came all the way from here and failed to close below. It rallied up a little bit, came down, still failed to close below. So we clearly see that price was respecting this level because it was a key level from the higher time frame, and just like that made another 2 hour. And you can clearly see how price has been respecting these key levels. Although no, we did not take any position from here because this was late New York session, probably midnight, and now we can see a new day. We have price still respecting this level at the early hours of New York, London. Price respecting this level at the early hours of London, and we expect price to continue higher, at least target this level before we'd expect any serious treatment or any change. So this engulfing would have been the entry. We stopped just below. We're already 2 hours already been fulfilled. So target here for a clean 3 hour. Our positions are probably broken even or in profit by now. So basically, this is the workaround and how I take positions using key levels and price action and candlestick confirmation type shit. I hope you found one or two things insightful from this video. I want you to go back to the charts, do your own back test. Till I see you again on the next one. Peace.